$20,000 invested in QQQM could grow into something that completely changes your financial future. This is about one of the most powerful growth ETFs on the market today, built for everyday investors who want serious long-term wealth. But here's the part most people skip. There's a specific compounding scenario inside QQQM that could either make you very wealthy or leave you disappointed, depending on one decision you make at the start. If this is your first time here, welcome. On this channel, we break down ETFs, dividend investing, and long-term wealth strategies in plain language anyone can understand. If that sounds like something you want more of, hit that subscribe button right now and turn on notifications so you never miss a video. All right, let's get into it. So what exactly is QQQM? QQQM is an ETF launched by Invesco in 2020. It tracks the Nasdaq-100 index, which holds the 100 largest non-financial companies listed on the Nasdaq exchange. We're talking about names like Apple, Microsoft, Nvidia, Amazon, Meta, Tesla, and Google. These are the companies driving the modern economy. QQQM is essentially the younger, more affordable sibling of the famous QQQ ETF. The key difference is cost. QQQM carries an expense ratio of just 0.15% compared to QQQ's 0.20%. That might sound tiny, but over decades, it adds up to thousands of dollars saved. Now let's talk about what $20,000 actually does inside this ETF. The Nasdaq-100 has delivered an average annual return of roughly 14 to 15% over the past decade. Let's be conservative and use 12% annually for our projections. If you invest $20,000 today and never add another penny, here is what happens. After 10 years, your $20,000 grows to approximately $62,000. After 20 years, you're looking at close to $193,000. After 30 years, that original $20,000 could be worth over $590,000. That's the raw power of compounding working silently in your favor. But what if you don't stop at $20,000? What if you add even a modest amount each month? Let's say you invest $20,000 today and contribute just $200 monthly going forward. At 12% annually over 20 years, your portfolio doesn't hit $193,000 anymore. It jumps to over $400,000. Over 30 years, you could be looking at more than $1 million. $1 million from 20,000 and 200 monthly contributions. That's not a fantasy. That's basic math. The habit of consistent investing is the real multiplier that most people underestimate completely. Now, let's address the real risks, because no honest conversation about QQQM ignores them. The Nasdaq-100 is heavily concentrated in technology. The top 10 holdings make up over 50% of the entire fund. That means when tech pulls back, QQQM pulls back hard. During the 2022 tech sell-off, QQQM dropped over 32%. During the 2000 dot-com crash, the Nasdaq lost nearly 80% of its value. If you had invested $20,000 right before that crash, it would have fallen to around $4,000 on paper. The investors who stayed in and held through the pain recovered and eventually profited enormously. The ones who panic sold locked in devastating permanent losses. So who should actually invest in QQQM? This ETF is ideal for investors with a long time horizon of at least 10 years or more. It suits people who believe in the continued dominance of technology and innovation-driven companies. It works best inside tax-advantaged accounts like a Roth IRA or a traditional IRA because the growth compounds without being eroded by annual capital gains taxes. If you're holding QQQM in a taxable brokerage account, every time the fund rebalances internally, there can be minor tax implications. The Roth IRA is the most powerful vehicle for holding growth ETFs like QQQM because your gains grow completely tax-free after retirement age. Let's also compare QQQM to some alternatives you might be considering. VOO tracks the S&P 500 and is more diversified across 500 companies. Historically, VOO has averaged around 10 to 11% annually, slightly below QQQM's historical performance. However, VOO carries much lower volatility. VGT focuses exclusively on technology stocks and has actually outperformed QQQM in recent years, but with even higher concentration risk. QQQM sits in a sweet spot, significant growth exposure with slightly more diversification than a pure tech fund. For most growth-focused investors, QQQM represents a compelling balance between performance potential and manageable risk. Here is the single most important mindset shift you need before investing $20,000 into QQQM. Stop thinking about it as a short-term trade and start treating it like a long-term ownership stake in the future of technology. The companies inside QQQM are not going away. Artificial intelligence, cloud computing, electric vehicles, and digital advertising are industries still in their early growth phases. Every major technological revolution has rewarded patient, long-term investors who resisted the urge to react emotionally to short-term volatility. So here's your action plan. Open a Roth IRA if you haven't already, fund it with your $20,000, buy QQQM. Set up automatic monthly contributions, even if it's just $100. Turn on dividend reinvestment so every small dividend gets put back to work automatically. Then step away and let compound growth do the heavy lifting over the next decade or longer. Check your portfolio quarterly, not daily. Rebalance once per year if needed. That's the entire strategy. Simple, clear, and historically proven to build serious long-term wealth for disciplined investors willing to stay the course. If this video helped you see QQQM differently, do me a favor and smash that like button right now. Share this video with someone who needs to hear this message today. Subscribe if you haven't yet, and turn on notifications so you catch every new video we drop. See you in the next one.